Hello, Mark Laudy here. Let me ask you a question. What was the best performing index on the Singapore market in the month of July? Well, if you don't know the answer offhand, I don't blame you. But I do have the numbers here for you, and they make for very interesting reading. This is the list of top performing indices in the FTSE ST Index series. And you can see there at the top, it is the Utilities Index with a gain of more than 8%, leading the way among all the indices on the Singapore market. What's interesting too is how those other sectors that you can see here have performed. And keep your eye in particular on the last one there, technology. That had a 3% gain in the month of July. But now let's change the graphic, and you can see the year to the end of July figures. In other words, the percentage increases of these sectors over the 12 months, including July. And what you see is that technology is not in this list, but it's been replaced by real estate investment trusts, which are up 12.5% over that 12-month time period. And utilities still leads the charge, up almost 30% or so. Keep your eye once again on the real estate investment trusts there at the bottom as we go to the next graphic. Here it is. And what you're now seeing is the percentages of the yield, that is the dividend yield. And what you can see here is that real estate investment trusts is actually at the top of that list with almost 6%, while the utilities index is nowhere to be seen. It's kind of dropped off the bottom there. It is in fact just a 1.5% yield. So what that tells us so far is that, first of all, just because a sector does well in the short term does not mean it's going to do well in the long term. And it comes back to that phrase, which I'm sure you've heard in the past, that past performance is not an indicator of future performance. But the other thing that these three graphics show us and teach us really is that you have to know what you are investing for. Do you have a high risk appetite or a low risk appetite? What is your ultimate objective for saving and investing to begin with? Because if you're looking for capital appreciation, you'd be looking at different sectors than if you are looking for a high dividend yield. Now, nothing of what I say should be construed as investment advice. You should always seek out the advice of your professional licensed investment advisor. But let's delve a little bit further into the utilities index, because we know so far that it is the top performing index in the month of July with an 8% gain, and it is the top performing index over the last 12 months with a gain of almost 30%. The other interesting thing about the utilities index is its constituents. Now, you would think that a utilities index would include things like waterworks or electricity companies. But on the Singapore market, they are actually more concerned with wastewater treatment and things like that. And you can see the three constituents here. These are the High Flux, United Envirotech, and Hancor Environment companies. And in essence, what this graphic shows you once again is just how different these companies perform. High Flux, for example, is $1 billion company. Market capitalization more than $1 billion. So it's a big company. And look at its percentages there. First, what we see is its performance in July, up 4.4%. But despite that, it is still down over the last 12 months to the tune of more than 6%. So despite that gain, it hasn't made up for losses in other times of those last 12 months. The dividend yield there, 3 or so percent, almost 4% at current levels. So that shows you again that High Flux has had some volatile times, but they're paying a dividend. Let's look at the next one, and that is United Envirotech. You can see there a big gain in July and has more than doubled over the last 12 months, an almost 200% gain. But the yield, much smaller. And Hancor Environment, which has had a very strong rise in the month of July and is possibly the reason why the utilities index performed so well in the month, had a gain of 52% over the previous 12 months. But they don't pay a dividend. Okay, so what can we then garner from this particular graphic. It is long and short that indices, that grouping together like companies under the industry classification benchmark, the ICB, helps you as an investor even out the peaks and troughs. Imagine if you were invested in just one of these companies, but either you were looking for dividend and you were investing in the one that didn't pay a dividend, or you were looking for capital appreciation, but you backed the company which grew the slowest. What the index does is help you to even out those peaks and troughs and to get good diversified exposure across all the companies that fit into the industry classification benchmark. So, for more information about this report and also to sign up for the Securities Investors Association's mailing list where more of this sort of information is presented to you and you're able to get a grip on the market and your own investment strategy, go to cias.org.sg.